Bull Bear Buzz Podcast for decoding markets, fueling minds. Welcome to the deep dive. We're not just scratching the surface today, we're really getting into the weeds. Our focus is the Indian stock market, specifically April 29th, 2025. And at first glance, things look pretty uneventful.
Yeah, that Tuesday, the Nifty 50 closed at 24,335.95. That's barely a move, up just 0.03%.
And the Sensex.
Same story, pretty much. 80,288, up only 0.09%. You'd honestly think it was a bit of a slow news day for the markets.
But, and this is where it gets interesting, right? You dig a little deeper, look beyond those headline numbers.
And the broader market was telling a completely different tale.
Exactly. The Nifty Midcap 100, that was up 0.31%.
And the small cap 100 did even better, climbing 0.37%. So definitely some positive action happening there, away from the big indices.
It's like the smaller guys were finding their feet while the giants were, taking a breather.
Something like that. So our mission here in this deep dive is to figure out why. Why this split? We've gathered a whole bunch of sources, news reports, stock analyses, sector breakdowns, analyst comments.
It works.
To try and understand what was really driving things on that particular Tuesday.
So we're looking at the big picture, the Reliance and Infosys level stuff, but also digging into specific sectors, individual company stories, all of it. The main question for you listening in is, what caused this? Flat indices, but positive broader markets. Let's jump in.
Okay, so one big theme that kept cropping up in the analysis was this idea of range-bound oscillation. Basically the market moving sideways, yeah.
Right. Stuck in a rut, kind of.
And a lot of that was put down to caution. Vinod Nair over at Geojit Investments, he specifically pointed to ongoing geopolitical worries. Border tensions, that seemed to be keeping a lid on things.
That makes sense. Geopolitical uncertainty often makes big investors hesitant, doesn't it? They tend to wait and see.
Precisely. And adding to that, there just wasn't much fresh news, no major triggers to really push the market strongly in one direction or the other, just kind of drifting.
So within that drift, inside the Nifty and Sensex, there's a bit of a tug of war then.
Absolutely. You had gains in heavyweights like Reliance Industries, Infosys was up too, but those were canceled out by losses elsewhere. HDFC Bank, Sun Pharma, Kotak Mahindra Bank, they were all down.
So even on a flat day overall, lots of individual movement underneath.
Exactly. But, despite all that caution, there was one really important factor providing support.
The FIIs, foreign institutional investors.
You got it. Consistent inflows there. That was a recurring positive point in many reports.
They seemed pretty confident, didn't they?
They really did. Vinod Nair mentioned it, other sources too. FIIs had apparently poured in nearly 35,000 crore rupees over the 9 sessions leading up to this day.
Wow, that's significant.
Huge. And it showed the Nifty 50 had climbed about 6.6% during that same period. So that foreign money was definitely providing a safety net, stopping sentiment from turning too sour.
It's like the global investors were still betting on India long-term, even with the short-term jitters.
That's a good way to put it. There's sustained confidence. Even with those geopolitical concerns hanging around, it does suggest a longer-term bullish view on India's potential. Maybe something for retail investors to consider in their own strategies.
Okay, interesting. So FIIs providing a floor. Now let's shift focus to where there was more obvious action and flag the sectors. Clear winners and losers on the day.
Definitely. Top of the leaderboard was the Nifty IT sector. It gained a solid 1.23%, closed above 35,920.
And what was driving that?
Well, the commentary linked it to easing trade war tensions. Seems like positive signals on the global trade front gave IT stocks a nice boost. Makes sense, given how export-focused they are.
Yeah, very sensitive to global trade wins.
Yeah.
And then there was another area that saw some, well, frankly, spectacular gains. Defense stocks.
Oh, absolutely. That was quite something. Companies like Hindustan Aeronautics, HAL Mazagon Dock, Garden Reach Shipbuilders.
GRSE, yeah.
Their share prices just soared. Some were up as much as 15%.
15%. What was behind that surge?
Mostly expectations of increased demand for military gear, potential for higher defense spending, maybe linked back to those same geopolitical tensions we mentioned earlier.
Right, so the same factor causing overall market caution was actually boosting the defense sector. Interesting paradox.
It really is a fascinating dynamic. Now, on the flip side, which sectors were feeling the pain on April 29th?
Where was the selling pressure?
The Nifty Pharma Index took the biggest hit, down 1.06%, but it wasn't alone.
No.
Nifty Metal, Media, Realty, Auto, FMCG, They were all in the red too. Losses up to about 0.90% across those.
So quite a contrast. IT and defense flying high, while pharma and a bunch of others were lagging. Shows real rotation maybe, or just profit taking.
Could be either, or mix of both. It definitely highlights how nuanced the market was that day, not just one single trend.
Okay, let's zoom in even more now. Individual stocks. Earnings season was ongoing, right? BPCL reported Q4 numbers?
Yes, BPCL, their consolidated net profit was down 8% compared to the year before, came in at 4,392 crore, also dipped a bit. Revenue from operations was down 4% year on year. But they did announce a final dividend, 5 rupees per share.
Okay, so maybe the dividend softened the blow of the lower profit and revenue numbers. Something to keep shareholders happy?
Potentially, yeah. Dividends often provide that bit of support. Now, another interesting one was TVS Motor Company. They also had Q4 results.
And the results were pretty good, weren't they?
Very good. Net profit jumped 76% year on year. Revenue was up 17%. Really strong numbers.
So the stock price must have reacted positively.
Well, that's the thing. It initially dropped, fell by as much as 5% right after the announcement.
Huh. That seems counterintuitive. Why would that happen? Profit taking. Expectations already baked in.
Could be. Maybe the market had priced in even better numbers, or maybe something in the outlook wasn't quite what investors hoped for. It shows how the immediate reaction isn't always logical on the surface.
But the analysts still liked it, generally. I saw Jefferies was quite bullish.
Yeah, Jefferies saw an 18% upside potential. They listed 5 key reasons: the strong Q4 itself, expected demand recovery, solid exports, gaining market share, and improving margins. A pretty comprehensive bull case.
But not everyone agreed.
Not entirely. That's what's fascinating. Other brokerages, ICICI Securities, JM Financial, Kotak Institutional Equities, they had different ratings, different target prices.
Right.
Motilal Oswal, for instance, stayed neutral. They were a bit concerned about how TVS was doing in the motorcycle segment specifically.
So same results, different interpretations. Depends what factors each analyst weighs most heavily, I suppose.
Yeah.
Valuations versus future growth.
Exactly. It's a good reminder that analysis isn't always black and white. There's subjectivity involved.
Definitely. Okay, moving on. Tata Technologies saw a big drop, right? About 6%. What was the story there?
That was mainly down to a block deal. A large chunk of shares, looked like about 3.94% of the company, was sold off in one go.
Ah, a big seller unloading stock.
Seems like it. Reports suggested it was likely TPG Rise Climate selling their stake. And this happened even though Tata Tech had just reported a pretty decent Q4 profit increase, over 20%.
So the block deal itself created the selling pressure regardless of the company's performance.
Pretty much. When a large volume of shares hits the market like that, even in a private deal, it can temporarily push the price down just due to the increased supply.
Got it. Okay, on a more positive note, PNB Housing Finance had a good day.
Yeah, they rallied strongly, up 10% intraday at one point.
What drove that?
Strong Q4 results. Their profit was up 25%, driven by good demand for home loans. And they also recommended a dividend, €5 per share, just like BPCL.
So a clear case of strong earnings boosting investor confidence there.
Textbook example. And another stock that surged was Whirlpool of India, up 10%.
What was the news there? Not earnings.
No, this was different. News broke that several private equity firms were apparently looking at buying a stake in the company.
Potential acquisition interest.
Sort of. The main promoter, Whirlpool Corporation, had already said they planned to sell down their stake to about 20%. So this interest from PE firms added fuel to that fire, suggesting a potential change in ownership or strategy, and the market reacted positively.
Right. The prospect of new investment or a strategic shift can definitely move a stock. We also touched on the shipbuilding sector earlier, seeing strong gains.
We did. Mazagon Dock, GRSE, they had a really strong day. Double-digit gains for some. Mazagon Dock even hit a record high.
And that was linked to?
A mix of things. GRSE had a new lease agreement, but the broader story was the positive outlook for the whole sector. Government initiatives, defense spending expectations we talked about, it all feeds into that.
Shows how government policy can really impact specific industries, doesn't it?
Absolutely. It's a complex picture, all these different factors at play. But, stepping back to the broader market outlook, analysts were sounding a note of caution, weren't they? Despite the market having pulled back a bit recently.
Yeah, that seemed to be a key takeaway. Standard Chartered, for instance.
Right. They downgraded Indian equities, moved them to neutral, They mentioned policy uncertainty, specifically concerns about potential U.S. tariffs, and just generally higher volatility making the risk-reward less attractive.
Even though they still had a decent Nifty target for 12 months out.
Yeah, 26,000. But the downgrade itself signals a more cautious stance for the near term.
And Kotak Institutional Equities had concerns too, right? About earnings.
They did. They felt that the earnings estimates for the next couple of fiscal years, FY26 and FY27, might be a bit too rosy.
Especially for certain sectors.
Particularly for export-oriented ones, autos, IT services, given the global growth picture and those tariff uncertainties. They also questioned whether consumption companies could keep benefiting so much from lower raw material costs without passing some savings on.
So a potential mismatch between market hopes and what some analysts see as underlying economic reality.
That's the concern they raised, yes. So while we saw pockets of strength, there's this undercurrent of caution about the future.
Okay. Let's quickly touch on the Ather Energy IPO. How was that progressing on day 2?
It saw pretty good demand from retail investors. That category was fully subscribed.
But the bigger players?
Lagging a bit, yeah. The non-institutional investors, NIIs, and the qualified institutional buyers, QIs, weren't fully subscribed at that point. The price band was set at $304 to $321 per share.
And the money raised was for?
A new factory, mainly. For their electric two-wheelers in Maharashtra, also for paying down some debt, R&D, marketing, general corporate stuff, the usual reasons. Part of it was an offer for sale, too, so some existing promoters were selling shares.
Got it. And what were the brokers saying? Subscribe, avoid.
A real mix, actually. Some said subscribe for listing gains, like Arihant Capital. Others, like Geojit, suggested subscribing, but with a longer-term view.
And some said avoid.
Yeah, Devon Choksi Research, for example. They suggested maybe waiting and trying to buy shares later in the secondary market, possibly at a better price. So again, no single consensus view.
Diverse opinions seems to be the theme of the day. Okay, just a couple of other quick business updates from that day.
Sure. Burlesoft got some recognition from Oracle, achieved Oracle Cloud Solutions Provider expertise. Good for their credentials. And Optimus Electronics partnered up with ASRock to make motherboards here in India. Enterprise and gaming ones, tapping into that domestic manufacturing push.
Right. Little pieces of news showing activity bubbling away beneath the main market indices. Finally, there was a technical take on the Nifty Oil and Gas Index.
There was. That index had been on a tear, actually, up over 19% in the previous 3 weeks.
Wow.
And it was getting close to a key technical level, the 200-day moving average. That's often seen as a major resistance or support point.
So analysts were watching that closely.
Yeah. Technical analysts saw positive signs, momentum indicators looking good. They flagged potential further upside for the index, maybe towards 12,450. And they also highlighted a few specific stocks in the sector that looked promising from a technical chart perspective. PCL, beat PCL again, Gujarat Gas, Aegis Logistics, pointing out potential target levels and support areas for those.
Okay, so even on a day where the main market was flat, technical analysis was pointing to potential action in specific areas like oil and gas.
Exactly right. So if we boil it all down, the key takeaway from April 29th, 2025, it was really a mixed bag, wasn't it?
Definitely. Flat headline numbers, but underneath you had sectors like IT and defense doing really well, while pharma and others struggled.
And individual stocks were all over the place, reacting to earnings, block deals, PE interest. It really shows you need to look beyond the Nifty or Sensex number to see what's actually happening.
And we saw all those different forces pulling and pushing geopolitics, FII money flowing in, company results, technical levels.
Plus, those differing views from analysts about what's next for earnings and the market overall, lots of uncertainty still baked in.
It really paints a complex picture, highlighting why just reading the headlines isn't enough. You need to dig deeper.
Absolutely. It underlines the need for investors to understand the why behind the movements.
And speaking of investing, just our standard reminder here. The information provided in this deep dive is for educational purposes only and not financial advice. We are not SEBI-registered advisors. Investing in stocks carries risks, including potential loss. Consult a SEBI-registered advisor before deciding. We are not liable for any losses from decisions based on this information. For more unbiased market updates, please subscribe to Bull Bear Buzz Podcast.
So a final thought to leave you with, given everything we've discussed, the mixed signals, the different sector performance, the cautious analyst outlooks alongside FII confidence, what does this snapshot from April 29th tell you about potential opportunities or risks ahead? Where might digging even deeper into specific sectors like defense or IT or maybe even pharma on the downside be valuable for your own thinking, something to consider?